Proszę Państwa, a teraz chciałbym powitać w naszym gronie osobę szczególną, bardzo ważną, nie tylko dla sektora bankowego, ale dla całej gospodarki, pana przewodniczącego José Manuela Campa, szefa Europejskiego Nadzoru Bankowego. Mr. Chairman, Mr. Campa, I would like welcome you cordially here in our annual banking forum. We are very glad that you accepted our invitation. In this very difficult period for us and very complex period for European community, I'm convinced that your analysis, your remarks, your recommendation for a banking industry will be very important, will be very stimulating and very inspiring for us and for banking community in Poland. And I would like to ask you for your speech presentation. Floor is yours.
Thank you, President. Thank you very much. Good morning, everybody. Ladies and gentlemen, I'm also honored to join you for this year's Banking Forum. We meet at a time when peace in Europe is again broken, a time when we see both the worst and best of man, a time when words cannot describe our horror at acts of gross inhumanity and our pride at acts of great benevolence. A light in this darkening is the astonishing humanitarian response of Poland and its people. Since February 24, more than 2 million refugees from Ukraine have been accommodated, with 1.3 million of them fleeing via Poland. Your countrymen and women have provided food and shelter, warm clothes and toys to those who have had to leave everything behind. Your policy response has scaled rapidly with the establishment of a government platform for refugees to report their individual needs and humanitarian organizations and private citizens to provide and report their aid. This week, your government has passed a draft bill to create an 8 billion zloty fund to help refugees, enable them to legally work in Poland and access public health care and social assistance. EU funds are being made available to support both the immediate and longer-term needs as well. It's not only the people of Ukraine who owe you a debt of gratitude for this action, and I would like to thank you as well for all that you've done. As the EU and international community deepens its response, including additional sanctions on Ukraine's aggressors, it's clear that our post-pandemic EU recovery path will be challenged. Based on our indicators, the Polish banking sector is well placed to withstand shocks, with a loan-to-deposit ratio of 83.5%, a liquidity coverage ratio at 211%, which is well above the European Union average, and a cost-to-income ratio of 49.7% compared to an EU average of 62.7%. This cost-to-income ratio demonstrates not only the benefits for banks of higher policy rates, but also the cost efficiency of Polish banks, in turn a reflection of the gains to be offered by digitization, a theme on which I would like to reflect with you today. Although we're still at the start of the digital transformation, it's clear that digitization offers many advantages. For consumers, mobile and online banking applications can transform experiences, opening up access to financial services on a 24/7 basis and reducing transaction processing times and costs, for instance, in the context of cross-border payments. Bank office processes can be streamlined, resulting in improved efficiencies and cost reduction, for instance, in the context of processes for suspicious transactions monitoring and regulatory reporting. Supply and demand for financial services can be matched better through digitalization, for instance, through the use of robo-advice and automatic credit scoring. And the use of digital platforms is rapidly increasing, enabling consumers to access multiple products and services and financial institutions to leverage network effects in distribution. Capital flows can be improved as well, including cross-border, for example, through the direct provision of banking services through the single market. The competitiveness of the EU's financial sector can be enhanced, leveraging dynamic competitive forces within the sector. Crucially, technology can also help support the transition to sustainable finance, for instance, in terms of improving the comparability and traceability of products and services across the Union. And in the context of the refugee crisis that we're currently living, technologies can be leveraged to facilitate access to financial and other services for those who are unable to access branches. Poland provides an excellent example of the transformation potential of digital finance against a background of widespread digital adoption. According to my information, 93% of all households have internet access in Poland, and mobile broadband subscriptions are 133% per 100 inhabitants. This means that perhaps many of you are sitting right now with two phones in your pockets. But small joke aside, this is a crucial indicator when we consider that 40% of Poland's population lives in rural areas and digital access to financial services is critical. In line with the broader digital acceleration observed across Europe since the start of the COVID-19 crisis, Polish banks and other financial institutions have expanded online and mobile applications, contactless payments, bank-branded pay-by-link payments, and sector-wide solutions such as the BLIK mobile payment service. Innovations have been adopted by incumbents and new entrants alike, not only in the context of payments, but also personal finance management applications, crowdfunding, online factoring, financial comparison sites, and in many other areas. Of course, much of the innovation is demand-led, but the willingness to invest in digitization on the supply side is notable as well, as is the pragmatism adopted by the KNF towards the use of cloud and innovative technologies such as blockchain, albeit of course still requiring high standards of operational resilience. As a wider observation, I highlight investment initiatives such as START in Poland and the Polish Agency for Developing Entrepreneurship to support newer entrants. Overall, I see a very dynamic fintech landscape in Poland. Now, I have described briefly the Polish landscape by way of illustration of the broader technology-enabled changes we're witnessing across the EU financial sector. This can be grouped into three broad categories. First, new financial products and services are being developed. Second, new ways of delivering those services by incumbents and newcomers are taking place. And third, deeper and larger interdependencies among players within and beyond the financial industry are also arising. Each one of these trends presents opportunities and also new challenges for us as regulators and supervisors. Emerging products and services transforming both front and back office require close monitoring and may necessitate adaptations to our regulatory and supervisory frameworks. We have seen, for instance, an acceleration in experimentation and rollout of RegTech solutions and issued a report last year on the benefits, challenges, and risks, as well as steps to ensure the sound adoption and scaling of RegTech solutions in the EU banking sector. Recently, we also issued a discussion paper and have opened a public consultation on the implications that the use of machine learning techniques have in the context of internal rate-based models to calculate regulatory capital for credit risk to promote knowledge and understanding and convergence in acceptance of this use. New business models and new entrants also require close monitoring as they drive changes in the structure of the EU financial system. Clearly, payments has been an area of faster development. Following the opening up of payment accounts data as a result of the PSD2, and with that, the growth in the use of APIs to support information sharing, we have seen large innovations and players actively transforming this business. But business model transformation is affecting all areas of banking. Bundling and the cross-selling of financial and non-financial products by new players will likely rise. And we already see growing interactions between incumbent financial institutions, fintechs, and big techs through a variety of models, including partnerships, joint ventures, outsourcing, and sub-outsourcing, and M&A. These firms may also be partnering to co-innovate and provide new products or services leveraging complementary competencies and customer bases, for instance, in the context of health insurance, health monitoring, and healthcare. The interdependencies created by these structural changes is the third area requiring close monitoring. The value chain of many financial products is being disrupted, broken. Who does what in the provision of a financial service is rapidly changing. By now, we are aware of the increase in cyber-related risk or some of the implications of financial institution dependencies on large technology companies, including the big techs, for data analytics, for cloud, for platform, or for advertising services. But new and more complex interdependencies will continue to arise. Looking across these three dimensions and beyond enhanced monitoring, Does our regulatory and supervisory framework need to change? I think this is a question that we need to address, and I would like to spend a few minutes on. Last month, the European Banking Authority and the other two European supervisory authorities, we published our response to the European Commission's call for advice on digital finance. In our report, we described the need for changes to ensure that our approaches to regulation and supervision remain fit for purpose in the digital age. Some initiatives are underway already with flagship legislative proposals, such as the Digital Operational Resilience Act, so-called DORA, which will strengthen operational resilience across the financial sector and expand the boundary of financial sector supervision to those entities that provide critical ICT services to financial entities. But in other areas, work remains to be done. And here I will turn to some of the key horizontal findings of the ESAs in this response to the call for advice. First, closer cooperation between financial and relevant non-financial authorities is needed to address these new challenges. It is clear from our work that the vast majority of financial sector authorities currently have a limited understanding of platform-based business models and value chain evolutions, particularly in the context of interdependencies between financial institutions and technology companies outside the perimeter of competent authorities' direct supervision. Over time, this imperfect understanding of business models could impair the effective monitoring of specific risks, including those arising from financial, operational, and reputational interdependencies. As such, closer cooperation between different types of authorities, including financial data, cyber, consumer protection, and competition authorities, is needed as the structure of interconnectedness of the financial sector continues to evolve. Second area, and this is a wider point, both public and private sector need to continue to invest in digital skills. For the private sector, the benefits are obvious. For the public sector, these investments are essential to ensure the supervisors have the knowledge and experience they need to understand the opportunities offered by digitization and anticipate and challenge effectively on the risks. Training and also knowledge-building initiatives, for instance, through innovation facilitators, can benefit both industry and supervisors. Third area of focus, in light of the merger of new mixed activity groups combining different types of financial services and sometimes other services not in the financial industry, the existing perimeter of prudential consolidation and financial conglomerate rules may need to change so as to ensure effective coverage of group-wide prudential risks and may give rise to level playing field issues, such as between bank and non-bank groups. In this area, the three European supervisory authorities signal a need for further business model analysis. Fourth, also the proposal for DORA that I referred to before provides a framework for the mitigation of ICT risks. Regular assessments will need to be carried out to determine whether financial institutions exhibit dependence on certain providers that may not be captured by DORA and represent a risk to financial stability. Fifth, actions are needed to better protect consumers against this background of market change. There are two aspects to this. One are supply-side measures, such as measures to ensure that disclosure requirements are fit for the digital age. Another one is the demand-side measures to ensure that consumers have the skills they need to help make informed choices. Here, I point to a need to further clarify the proper use of customer data under the ultimate ownership and understanding of the consumer. To help achieve this objective, we're working on further actions to promote a higher level of digital and financial literacy. A recent joint ESA's high-level conference on consumer education and financial literacy provided some excellent inspiration for our work, and I would encourage you to think about how to make disclosures of financial product features most effective and accessible through digital means. Digital finance, therefore, remains one of the ABA's strategic priorities, and we're taking forward an ambitious program of work for this year of 2022. By way of follow-up to the ABA's September 2021 report on digital platforms, we will support competent authorities in developing common questionnaires for regulated financial institutions on digital platform use to improve monitoring capacity. On operational resilience and digital operational resilience, we'll continue our preparatory activities for the implementation of the Digital Operational Resilience Act once approved, which is expected to enter into force at the beginning of 2023. These activities aim to ensure that the European Banking Authority will be well prepared to take up any new task under this piece of regulation. Moreover, we will be enhancing our focus on cybersecurity through targeted monitoring of the cyber landscape across the financial sector. The EBA will work along with the other ISAs towards addressing the recently published European Systemic Risk Board recommendation on a pan-European systemic cyber incident coordination framework. This work gains additional importance in the context of the current crisis that we are living. In relation to the crypto assets and decentralized finance, the EBA will develop in 2022 templates that competent authorities can use to facilitate a more convergent approach to the monitoring of crypto assets activities at the domestic level. Additionally, the European Banking Authority will continue to contribute to ongoing EU and international work streams on crypto assets, including so-called global stablecoins, and to the prudential treatment of banks' exposures to crypto assets, on which a further Basel Committee consultation can be expected this year. In the area of artificial intelligence, as mentioned before, the EBA will access the public feedback received on the discussion paper on the use of machine learning for internal rate-based models and will consider whether any additional measures should be taken in this regard. Moreover, we will continue following the co-legislative procedure on the proposed Artificial Intelligence Act with a focus on its potential impact to financial sector. We will also be organizing a series of RegTech-related events where we will invite financial institutions and RegTech providers to share their experiences. In parallel, the EBA will continue to facilitate the sharing of best practices among competent authorities on how to use subtech to enhance the effectiveness and effectiveness of the supervisor's work. Finally, it goes without saying that the EBA is looking into the interfaces between technology, sustainability, and product innovation in order to contribute to the green and digital transformation of the EU financial sector and the real economy. As you can see, we have a full agenda in our work program for this year on the area of digitalization. I look forward to continue to engage with you on these issues and draw your attentions to the European Banking Authority's FinTech Technology Hub for our publications and information about upcoming events in these areas as well as newer developments. Thank you very much for your attention, and thank you very much again for the invitation to be here with you today. It's been a real honor.
Mr. Chairman, thank you very much. Your speech was very inspiring and very important for us. We are very proud that in Poland our banking industry is well digitalized, and month by month we may present for other sectors in our economy our possibilities and our experience. And we provide different banking and digital services for our administration, for our also local communities and thousands of enterprises.